All right, starting out here with SP 500. It is Monday, October 7th. So we have a trade that we are in using the inside pitchfork right here. What we have, here we have, there's the 1.2, and then here's 3 and 4. And you see 3 and 4 right here are inside points 1 and 2. So that's the trade setup. We put the inside pitchfork on, and then when the price closes below right there, we're there to get in. And the first retracement back to 23.6, the green line right here was right there, so that is where we are in. It did get close to getting in there, but still definitely not close enough to hit that 23.6 to consider it. So yeah, so that's where we're at. And now the Fibonacci rules apply. The exit is going to be down here at the 1.146, the top of the green box right there. That's going to be the exit. So that is what we are looking for. You see we got in right there. So when the market closes, it wipes out all of my orders that are set. So my take profit order gets wiped out. So when the market opens back up here in 26 minutes, I'll put another in short order right here at the 50. Another one about right here below the 88.6. Just slightly below the 1.146, and then one more right here. May put two at 1.146, which I will put two at the 1.146 for it right there at the opposite way. So that's where we'll go. So did a lot of looking at it over the weekend, and I'm pretty confident to say that we can use the inside pitchfork as a day trading setup, just like we can for the Andrews pitchfork, but not the shift pitchfork. So that's why we're doing it. So hopefully, my analysis is right. If not, then have to take a big loss and move on. All right, so for the Russell 2000, there's really nothing going on here in the Russell 2000. The only thing we are looking for is a potential pitchfork trade, but there still has to be some movement. What we need is price to go up. Break point A right here, so it needs to break about 22.6.80 and just break it. That's all it needs to do. And then we would need price to, where's the arrow? There we go. And then we need price to come back down, close below the green line down here somewhere. I'm just using this as an example. I'm not saying it has to be right there, but anywhere below the green line. And that's where we look to get in for the trade. So still, but it is a good forming Andrews pitchfork for it. So if this does work out, if the price does continue to go up, break it, then we'll definitely keep this on here and look for the Andrews pitchfork short setup for the Russell 2000. But that's basically all we have right there. We had these two little pitchforks that messed everything up right there. Or not pitchforks, I'm sorry, semaphores. So right now, this is all we can look for. For the Dow Jones, this is a trade I was talking about Friday. Went and came down and hit it today. And let's see, so when market opened, I missed that one, of course, because I wasn't able to be home at that time, but able to get in right about here for another contract for the 1.146. As you can see it hit. So when that happens, we move price up to the 23.6 right there. And then I got out, we're at 42.389, where that is, right about here-ish for my contracts. We're right there. So real nice trade, and that's just the standard Andrews pitchfork short setup right there. So now going into, let's take all this off over here. Let's see what we have. So there's a, let's look at this right here. So here's a 1.2.3 and 4. So that sets us up for, let's put this on right here to look at that. Well, we have two that we could look at right here. So we'll look at this one, the inside pitchfork. So we put the inside pitchfork right there, and right here. Let's extend these lines here so we can. Okay, so yeah, so it did break out right there. Okay, cool. So we will go from the lowest point where it's at, which will be. This is the question I have. Do you go from right here, or do you go from right there? Because if it's right here, that's what we're going to do. It's already in right there. So this is a trade we're looking at right here. For it, price had already come back, hit the 50. So the X we're looking for is the previous high, which is way up here. And There we go. So that's where it is, but then it came down and hit the 1.146. So now that it hit the 1.146, the exit that we're looking for is going to be right there. So this looks like a pretty good trade. I think I may get in this when the market opens up for a long trade right there. See when it hit the 1.146, that moves the exit to the 23.6. Let's see what it would look like if instead of that we use this. Is it? No, this is the previous low for it. So there's the breakout. There's that. Let's take that off of there. That, and that. So then it hit the 2.6. Yeah, that's what we're going to go with. Okay. Yeah, so that is where we are at right now for it. Get that off of there. So even though it didn't break out to right here, some of the inside pitchfork is weird. We put it from the Fibonacci to the low to the high of the move. So it was already in the 50% when it broke out. It already hit it. So the exit would have been up here at the previous high, which is right there. That obviously did not go up there and get hit. But then price came down, hit the 1.146. So yeah, when this market opens right here, I'm gonna get in right here at this point and look at getting out right up over here for the Dow Jones for it right there. And then we have another potential one. See, we have the 1, 2, 3, and there's the low right there for fourth for the Andrews pitchfork, because that should eventually turn red for it for the semaphore down there. Let's see what this looks like. No, that's Andrew pitchfork is too messed up right there. So unfortunately, if it was straighter, it would have been a really nice trade setup. But yeah, right now that's not good at all. Going over to oil. Oil again is just moving on up. Not much to say about it. Let's look. Where did I put this on here? Let's see what this looks like. So here's that, and that. So that was a fourth. You get in right there. Oh yeah, this one. Unfortunately, this was a trade, but it came on at what time was it? Midnight. So yeah, there's no way I'm getting in that. I'm asleep at that point. Yeah, here it hit the 23.6, so the exit's right here. Went up there and hit that. So yeah, that one's done. Unfortunately, just small little setup right there. But other than that, in oil, there's not a whole lot going on right now. We're just waiting for a good setup. As you can see, oil is just in a very, very bullish trend right now. Ever since bottomed out right here, we went into consolidation right there, and now where is the channels? Now we'll just stick some trend lines on there. As you can see, we are in a very bullish upwards trend. And so like I said last week, what happens, there's that one to there, to there we go. So yeah, so you can see we're in downtrend. We came out of a consolidation pattern, went to a downtrend, into a consolidation pattern, and they overlap. That's just what they do. But then from the consolidation, we went into an uptrend. So eventually what's going to happen is this uptrend is going to form, I'm not saying it's going to happen right here, but just as an example, into a consolidation. And then from there, it's going to do one of two things. It's going to create another trend to the upside or a trend to the downside. Typically, most of the time, it goes the opposite direction after it's been going one way. So typically, we would look for a downtrend here next in the move. Now, doesn't mean it has to be a huge downtrend at all, but we would look for a downtrend and then consolidation somewhere along the way. And then, again, has to one, two things, move up or move down. But since it had been going from a downtrend, we look for an uptrend for it. So doesn't happen all the time. Sometimes it goes uptrend, sideways uptrend, or downtrend, sideways downtrend. But that's what we're looking for right there for oil. Excuse me. And then for the Nasdaq right here, we have another setup just like the S&P 500 using the inside pitchfork for it. Here's points 1 and 2. Then there's 3 and 4 within points 1 and 2 right there. So we were looking for the teal line to get broken, to close below it, which it happened right there. You can see it closed below the teal line. So once it did that, the original exit is all the way down here. That red line right there at the bottom of it. What level is that? That's 5. And then, just zoom this in a little bit more. That obviously didn't happen. It retraced. I don't know why I'm moving this all over the place. Sorry about that. Then price came up, hit the 23.6, so that signals to get into it. The exit is going to be at the 1.146 right there. There we have it. From right there to right there. So the market opens out, my exit somewhere right around there. I have another entry, right, just slightly a tick or two below the 50%. Another entry a little bit more below the 88.6 right there. And then another entry just a tick or two below the 1.146. And an entry right at the 1.14. So those are the Nasdaq trade. That's the Nasdaq for it. So the best setups right now is going to be the Nasdaq, obviously the S&P, both in short setups. So you know, price could go against it for a while. The maximum I've seen for the research I've done is it going up, breaking maybe about the 1.44 right there a little bit before it decides to come back down and hit it. But hopefully, which should be fine. So if it does go up, it just creates more entries to get in before it comes down and hit it. If it just goes straight down, then that will take us out of the trade right there. And then excuse me, we have this long right here in the Dow Jones that we'll look to get in and then take it out up there. So yep, we shall see what happens tomorrow. All right, thanks, bye.